I'm assuming that you're as excited as I am about the recent turn of events that kept our government from shutting down just a few short days ago. Whew. I mean, come on, guys. It's touch and go there for a minute. I mean, catastrophe averted, right? Once again. No, seriously, again. This happens like every year. You do see that trend, don't you? Anyways, my thinking is a government shutdown might not be such a bad idea for my side of the table. For example, politicians were telling us that a shutdown would almost certainly lead to a recession. But a recession would lead to lower mortgage interest rates, and wouldn't that help us? Right? Now think of this.
A government shutdown means federal employees wouldn't be paid. Isn't that exactly what realtors and loan officers have been dealing with for the past year? Not getting paid due to policies put in place by people who would be displaced by a shutdown. I mean, what's good for the goose, it's good for the gander, right?
Simple supply and demand, it's what controls and dictates real estate and if we're successful or not. If we have more supply of loan products out there, we can fill the demand of people who are looking for it. You can get there with non-QM loans. I don't know why we don't look at this more frequently. Talk to my friends over at Oaktree. They will fill your supply of loan products, and all you have to do is find the demand. Just call them. They're waiting for you right now. Fill out the information down below. Well, that's not the only problem here, Joanna. Understand that a government shutdown would also lead to a national downgrading of our credit. Isn't that the same thing that realtors and lenders have been dealing with their credit as a byproduct of not getting paid? So I'm thinking if it helps housing, and it appears it would be the case, I say shut the government down for the next 43 days. Why? Well, it can't get much worse than it is. Recessions lead to lower rates, and that leads to, well, here's what it leads to. Are we gonna have a recession? Well, how about this is an indicator that you've never thought of? Trucking.
That's right. Trucking. Here's a graph of trucking-related hires. Now, the vertical gray bars are recessions. Look at how trucking-related hires fall off a cliff at exactly the same time as recessions, and only during recessions. Now look at the far right of this graph. Look at the hires. Now what would you say is the next logical outcome? Seems to me like a recession is all but a foregone conclusion, at least by trucking standards.
You know, this really does make sense, doesn't it? Trucking slows down when the economy slows down. That's an easy connection. So read the tea leaves, people. Let's read the tea leaves. If a recession is next, what happens with interest rates, huh?
Here's a Fed Reserve graph of rates and recessions. Going back all the way to 1970, an enormous upsurge in rates precedes every recession, followed by rates dropping significantly during and immediately following all recessions.
So are we then going into a recession? I mean, it kind of seems that way, doesn't it? Well, are rates then going to drop? Kind of seems that way too, doesn't it? Now, here's where it intersects you. Should you be counseling your people right now to buy and sell homes and take out mortgages? And I say, well, number one, it's your job. Number two, it's a good time. And number three, there's a real sliver of opportunity right now. Here's where it is.
We've all heard buy low, sell high. What about sell high, buy low? It makes sense.
Oh, it doesn't.
You see, entry-level homes in every market are the hottest commodity, the most in demand, because that's about all anyone can afford. So if you own an entry-level house and you sell, you're gonna get top dollar.
And when you buy a house to replace your just sold entry-level home, you're buying into a softer market. So you sell high and you buy, well, not quite as high. You don't need to give any concessions when you sell, do you? You could probably get some concessions when you go forward with that purchase. Maybe you have your realtor, I don't know, negotiate points to buy down your rate. Maybe you buy down your 5-1 or your 3-1 arm. Now that sounds like a good idea because as we just showed you, rates are gonna come back down before your arm is gonna have an opportunity to adjust. That seems like a good idea. And understand this point, it's important if rates come down, then demand for existing inventory goes up, and this very unique market that we find ourselves in right now to sell in disappears in a lower rate environment. Why? Well, because those move-up homes have more bidders on them in a lower rate environment, and you won't be able to negotiate some of those concessions. They'll be gone tomorrow. So what are you waiting for right now? Seriously, I mean, realtors and lenders alike, make this your talking point. It's a moment in time, and that moment is right now. Call all those clients up. Do it in unison with your lender or your realtor partner. Do it today because tomorrow the narrative may change. We might be in a, oh God, we might be in a recession tomorrow. And that, I don't know, that would suit me just fine.